Crista Huff is chief analyst at Cabot Undervalued Stocks Advisor. Yesterday we saw a crazy whirlwind for oil. Want to find out how oil is doing now. But yesterday we looked like in a negative territory for oil. It's just insane. Let's walk through a little bit of what happened there and something that was historic. Not in a good way historic, but historic nonetheless. And also what's happening in the stock market and more. Crista Huff rejoins us here on Jimmy at the Crossroads. Crista, hello, how are you?
Hey, Jimmy, I'm doing well. How are you?
You know, I'm doing just fine. So where's oil at right now? What did we see yesterday? Kind of give us an overarching view.
Yesterday there was an incident, let's say, in the oil market, but it was sort of a problem waiting to explode. So yesterday's incident was just the catalyst for the bigger problem. So the catalyst was the expiration day for the May Texas intermediate crude futures. So people who were long the futures had to close out their positions and basically sell their positions for any price available, and it drove the price way down. So that was like a weird situation. But the bigger problem in oil is that there is no market for oil. Nobody's, buying oil. And when I say nobody, I don't mean zero people, but compared to the let's say the energy market 6 months ago when commerce hadn't been shut down because nobody knew about COVID-19. In comparison to that, the energy markets are in terrible shape because with business lockdowns, businesses aren't using their normal amounts of energy. People aren't driving, so they're not buying gasoline. Commerce is seriously constricted, not having all the tankers going across the oceans buying their normal amounts of diesel fuel. So basically, when there is no demand for a product or low demand, the price goes way down, and that's what we're seeing in the energy markets. And so the big question is, how does this get resolved? And the only solution that I can see is that heads of state globally and U.S. governors reopen their jurisdictions for business so that business can resume and then oil prices can rise again.
So it comes down to, it seems, more than anything else, as a result of the coronavirus crisis that we've been experiencing and the shutdowns from the government in order to address this pandemic, that it is more than anything oversupply because of a lack of demand. And that means that you have no choice as a producer but to bring down the price, and then it gets perilously low at times.
Right. And so I looked at the West Texas Intermediate crude price. It had recently been trading in a sort of trading range with $20-ish per barrel being the bottom of the range. And today it's down at about $12.10. So it's down about, 41% from yesterday's close. That's pretty bad. So I had anticipated that would, of course, affect the stock market, because how could it not? So yesterday, for an account that I manage, I bought some bearish investments against the S&P 500, and those are up 44% since I bought them yesterday, and I expect actual more capital gains. Unfortunately, I'm capitalizing on a tragedy, but someone's going to make that money. It might as well be me.
No, I mean, that's the attitude you have to have when you're an investor, is focusing on how can I make money even during a tough time, or especially because there is a tough time. You have to be looking at that. Krista, let's talk about just what investors should keep in mind as far as oil is concerned. I mean, obviously there are different aspects. I mean, there's commodity. Oil is a commodity itself, so it's traded on the commodities market. But then also you have companies that are invested in oil because they're oil producing companies. Now, there are some that are more diversified. For example, I know ExxonMobil's weathering this storm pretty well, it seems, because they have more of a diversified portfolio than just all their eggs in the oil basket. But there are other companies that may not be doing as well because they're more oil centric. What do you make of what investors should keep in mind from a stock standpoint and from other aspects of trading related to oil?
Okay, from a stock standpoint, there will be people who want to buy low on energy stocks, thinking, oh, hooray, they're cheap. But here is my general mantra. When there is a problem in a company or an industry, the problem always lasts a lot longer with more bad news coming out than anyone had ever anticipated. For example, when the Boeing company had those two plane crashes, was that last spring or the spring before? I think last spring.
I think it was last. No, I
People
don't remember.
people wanted to, right away there, I want to buy low on Boeing. And I'm like, whoa, there's going to be lawsuits, there's going to be investigations, there's going to be all kinds of bad news coming out. This is not the time to buy. So basically, you don't want to buy low during bad markets on problematic companies. You want to buy low on healthy companies that are thriving. So for example, Apple or Netflix would be a company that you would buy when the market is down. Don't chase companies that are having bad news. I'm not buying retail stocks right now. Doesn't matter how healthy that company was right before coronavirus. If you shut down any company for 3 months and tell them you can't sell your products, that's going to greatly harm the balance sheet. And we won't even know the extent of the harm for several months yet, presuming that business opens back up soon. So I tell people stay away from the problem companies.
Again, we're talking with Crista Huff, Chief Analyst at Cabot Undervalued Stocks Advisor here on Jimmy at the Crossroads. So let's talk a little bit about something that will be coming up. Actually, it started now, but it comes every quarter. It's called earnings season.
Yeah.
And that's when companies report their earnings, but also they give us a little bit of an indication underneath the hood, if you will, as to how these companies are performing. It's not that you can just look at the top line number and say, okay, that tells me everything I need to know. Earnings season always is an opportunity where you should go look deeper at a company and what are the things in that earnings report as opposed to just say the top line number. But even the top line numbers will give us some indication during this tough time. But you say this earnings season is going to be different. I think the next one will be even more different, perhaps. What do you mean by that?
Okay. Usually we look at Wall Street predicts, okay, this is going to be the profit, this is going to be the revenue, and then we see what the actual numbers are. And then the CEO chats, beginning in writing with the press release, but then they have a conference call right after they report the earnings, and they say, and this is our corporate outlook. Well, we already know that for most companies, the numbers are going to be horrendous versus if we hadn't been going through this virus pandemic. So there's almost no point at all in concentrating on what analysts had predicted for sales and profits this quarter. Instead, you want to pay like 95% of your attention to what the CEO and the CFO are saying about business going forward. Again, stay away from companies that are telling you about maxing out their credit lines and taking on debt and cutting the dividend. This is bad news, and it's not the worst of the bad news, because if that's the bad news today and the global economic lockdown is still in place, that bad news is going to get worse. So instead, focus on a company like Netflix, which we'll be reporting this afternoon. The big number on Netflix is always the number of subscriber growth. So they have been growing subscribers in the US, but the bigger number is the international growth number, because there's so much more room for them to grow there. And if you can picture all the folks in China in January and February sitting at home, not even allowed to step outside of their homes to a large extent, what are they going to do? They're going to watch movies, right? So we're expecting the Netflix numbers to actually be really attractive.
Crista Huff, when we look at a company, I mean, you just listed out some things that you think we should not, that investors should not be looking at. For example, the high debt load companies. But what are things that investors, from your standpoint, should be looking at, or people who may be looking at this opportunity and saying, okay, there are a lot of companies that are lower than they were before. There's opportunities to buy. I haven't gotten into the market before. I want to buy one or two stocks. What are some of the metrics that you look at on a company to invest in, such as this concept of undervalued stocks?
Okay. First of all, you want a company that's growing. And when we say growing, I always mean their profits. If their profits are going up, then pretty much everything's flowing relatively smoothly. So if you buy a company where the profits are rising, you should theoretically have your share price rise. Now, over the short term, literally anything can happen with share prices. But if you give a stock, 6 months to 3 years, and the profits are rising, you are probably going to make money in that stock. I do look for a lower valuation, both in compared to other stocks and the company's historic valuation. For example, last November, December, I was buying Amazon and Netflix because their price earnings ratios were lower than they have historically been. So even though it's a high price earnings ratio in general, it's low for Netflix and low for Amazon. And that turned out to be a really good investment because both of those stocks hit new highs, I think, this month, maybe this last week. So look for low valuation, good earnings growth, and companies that are not clearly having any trouble at all.
Now, explore a little bit. I don't think you delved in too much into Apple. What's happening with Apple right now?
Okay, Apple is about to report earnings. I think it's next week. It's April 30th. They always report in the afternoon, and they're on a September calendar year, so they're reporting their second quarter results. The cool thing about the April report is they historically report a dividend increase, most recently a 5% dividend increase last year, and they usually report a large new share repurchase authorization. In the last 2 years, those increases were $75 billion and $100 billion per year, meaning that that's the amount of money they spent to buy their own stock to take it off the market. So that creates demand for the stock. So if you're wondering, well, if I buy Apple, what can be a catalyst to drive it up? Well, not only are they selling their services on all their electronics, and not only are they selling more iPhones and such, but they're buying back their stock, and that increases their earnings per share. And again, that's profit. If profit is rising, in theory, your share price should rise. So when stocks fell in March, precipitously, the first stock I told people to buy in the middle of March was Apple. I love buying Apple during market corrections because then the market rebounds. Apple tends to perform super well, and you can just be happy that you bought it at a low price. So I'm thinking in the next couple of weeks, we're going to get another opportunity to do that.
Again, Crista Huff, our guest chief analyst at Cabot Undervalued Stocks Advisor. One thing I like talking with you about, as well as one or two of our other market guests we have on Jimmy at the Crossroads, is headlines and how to react to headlines or not react to headlines, because we get a heck of a lot of them, especially right now. How do you approach the startling headlines or the seemingly really good headlines, Crista Huff?
Well, there aren't too many good headlines, but if there are, maybe you should buy that stock. What I find is that, let's say there's a earnings season. So Netflix is going to report tonight, and they're going to have some great numbers. But somewhere in there, if you look really, really hard, there will be one bad number. And that is the number that will end up in the headlines. Because from my point of view, the media is really focused on scaring people. So they want to give you bad news and make you alarmed so that you tune into their show, you read their article. So I don't respect that very well. If people want to know what's really going on, they don't need to read an article. They can go right to the earnings press release where the CEO and the CFO are laying it out there. And I know that there are people who think, oh, they're just going to gloss over everything. But, they go to jail when they write lies in press releases and such. Elon Musk got in huge trouble last year for he wrote like one sentence on Twitter about sales numbers that were incorrect, and he got in massive trouble with the Securities Exchange Commission. So listen to the conference call, read the press release.
Yeah, go underneath the hood, as they say, a little bit more deeply, look more closely, because you don't want to just go off of some headline, whether it's about a company or about the stock market as a whole, or government policies, for example. I mean, that's a lot of the headlines that we get is whether it's a trade deal or a fall through of a trade deal, or we get a stimulus package, or the stimulus package is slowed down, or what have you. A lot of political headlines can come up and oftentimes spook investors or occasionally encourage investors. But if you're not paying close enough attention, then it could potentially come back to bite you. If you're just saying, I'm going to sell this because this looks like it's problematic, or I'm going to buy because this looks like it's great, and you're just going off of the headline, not very smart.
Yeah, don't go off the headline. I don't even read those articles. I just go to the source because then I'm going to get the bald facts without
But you
all
also
the
know what to
spin.
look for deeply, which is why, by
Right.
the way, I encourage folks always to use our conversations here on Jimmy at the Crossroads with Crista Huff or other market experts as a jumping off point for researching yourself and also talking with a financial advisor. But before we let you go, Crista Huff, what's something else you think we should know about the stock market or the dynamics right now, or a company to watch?
Okay. One more thing about earnings conference calls. So right after they send out the earnings press release, they have a conference call. Anyone can go to the investor relations website from their favorite company. So you would type in like General Motors, investor relations, and very quickly you can find the thing that says click here to join the earnings conference call. It gives you the time and date, and also you can listen to the replay. It's free. And the really interesting part, after the CEO and the CFO talk about their outlook for the company, then they open it up to questions from the analysts. So you've got all these Goldman Sachs and Credit Suisse and such, and the questions they ask will tell you what their big concerns are about the company and what they're thrilled about. And then, so you might think, oh, I'm worried about Netflix's US subscribers, but then you listen to the analysts and they're not worried about US subscribers at all. Instead, they're all focused on some other topic. And so if you want to get in line with what's really going on with a company, listen to the analysts' questions and of course, the answers that come to them.
That's such a great point. Crista Huff, Chief Analyst at Cabot Undervalued Stocks Advisor. Always great to get your insights. Thanks so much for rejoining us here on Jimmy at the Crossroads. Stay well and healthy.
Thank you so much. You too.
Once again, Crista Huff joining us here on Jimmy at the Crossroads. Chief Analyst at Cabot Undervalued Stocks Advisor. Always great to get her thoughts here on the show. Thanks for watching this clip of Jimmy at the Crossroads. Don't miss more engaging, intelligent talk. Subscribe today to the Jimmy at the Crossroads YouTube channel. You do not want to miss our live show. Thanks for your support.
I got Jimmy at the Crossroads, making sense out of no sense. Yeah.